All right, we're with you once again to take a look at our ag commodity trade here on a Monday morning. Let's dive into these prices here, and then we'll get some expert commentary momentarily. Let's look at the corn market first with these quotes provided by Bar Chart. Here we go. We have December now 3.5 cents higher at 4.14. Well, what happened? It was higher overnight, and then we opened things up, and it was lower, and now we're back higher again. Man, this is a whipsaw trade already. We have December at 4.14 per bushel, within one tick of its high of the day now. And March is 2 3/4 higher at 4.22 1/4. So very interesting market action early on. Soybeans, the same thing. January now back to unchanged at 11.48. It opened lower after trading about a nickel higher overnight, and then now it's caught in the middle. March beans are now a penny and a quarter higher at 11.49 1/4. Very, very choppy market action already this week. Let's go to the wheat. Let's go to Chicago. December down a penny and a half. We're at 5.92 per bushel, about 3 cents off our overnight high, but we bounced already 6 cents off our earlier low this morning. Kansas City wheat is down a penny and 3/4 at 5.50 1/4 per bushel. In the spring wheat market, now you have December down 4 3/4 at 5.50, and that one is only a couple of pennies off of its low of the overnight and early morning trade. Cotton market catching fire this morning, and now you have December up 103 points. We're at 69.49 per pound. The March is up 113 points at 71.54. So let's go to Chris Swift. He's with Swift Trading Incorporated, based in Nashville. Lots of action here in the early going today. Kind of hard to keep tabs on which direction these markets want to go here. So for the time being, for the moment, they're a little bit higher on the corn and soybeans. How do you read the tea leaves here so far on this week's trade?
Good morning, Marlin. I think a lot of it has to do with the U.S. dollar. The U.S. dollar index has been in a lower trend, and we've stagnated at the lower end of the range. And now, seemingly, with the elections over and going into the dead of winter, we still have a very weak U.S. dollar. So I think that probably, when we don't have anything specifically as in exports for the grains, or now we don't have anything planting other than just some wheat growing, that our exports are going to become more and more important to us. And I think that U.S. dollar index is what's going to gauge a lot of that.
You know, I was reading a report this morning that the Brazilian soybean planting is already 70% done this year, although it's only 1% ahead of its 5-year average. It seems kind of early, but they, after a 2-week late start due to dry conditions, it sounds like they've caught up and they're even ahead of schedule now.
You know, it's incredible how quickly that South America has increased. And, of course, with all of U.S. farm agriculture machinery over there, it's not hard to see either. But clearly they have been able to ramp up their plantings. They got some moisture into the ground, and it just does not take them long, like it does us, to be able to get crop in the ground once they get going.
So what's going on with the wheat trade? I hear Russia in the news every once in a while about their wheat quota that they were implementing. How do you read that?
You know, I've seen some things about it, and honestly, Marlin, I haven't paid close enough attention to give you any specifics of it, but wheat took a pretty good bath. They knocked about 20 cents off of it over the last week, and I have a feeling that with the dry weather, I saw the Palmer Drought Index from last week. We still have severe dry weather out there, so it's not going to surprise me a bit in the world to see wheat try to find a bottom somewhere real close to this area.
Okay, a quick check of our West Texas Intermediate crude oil market. We have December now up $1.53. Look at it go. $41.66 per barrel at the present time. Chris will be back, and we'll open up our livestock trade. Well, we'll take another look at it anyway and see how it's holding about a half hour into it when we come back. We're talking with Chris Swift of Swift Trading Incorporated in Nashville. And now let's go back to our livestock trade. We'll see what's going on there. After some heavy selling Friday afternoon, we have a little bit of a rebound here in the live cattle market. Not a lot, but some. We have December now gaining 40 cents. We're at 110.32. February 25 cents higher. We're at 112.47. And the April contract is now gaining 55 cents in the early trade. In the feeder cattle market today, you have your November contract down 12 cents. However, most of your action is going to be in that January. And that one is up 7 cents. We're at 137.95. And now you have March trading 45 higher at 137.60. Interesting here in that you have the most weakness on the nearby contracts, the most strength. For example, May of next year is 90 cents higher, way out there in the deferred. So it looks like, I guess you would call that some bear spreading taking place in the feeders. We'll find out from Chris here in a moment. On the lean hog trade, We're opening up with nearby December 55 cents higher. We're at 65.45 per hundredweight. In February, up just one tick, 2.5 cents higher at 64.60. And everything kind of mixed further out. So let's go back to the cattle market here, Chris. If we look at our livestock summary, when we wrapped up last week, we had the cash trade that was actually a few dollars higher than what we had the week before. It seemed to, I guess, put a plank of support, you could say, underneath this cattle market to get things started today.
It did. We sold off pretty sharply on Friday with the futures market, and it appeared that as we went into the weekend, we were going to see probably a blanket shutdown due to the COVID virus. This morning we got up, and some of the news articles that I have read suggested they're looking more for a state-to-state or city-by-city shutdown, more so than just a blanket. So I think that gave everybody just a little bit of a reprieve this morning from the selling that we've seen, towards the end of last week.
You know, we were talking earlier in this broadcast about the fact that the beef cutout values, after surging ahead for a better part of, 2 or 3 weeks, Thursday and Friday, I believe, they just kind of moderated and went kind of sideways. And the choice cuts on the Friday afternoon update were down 52 cents, but the selects were up $1.22. So have they had their run, or do you think this is a pause and we could see further increases in the wholesale beef trade?
Well, I think right now what we've seen is we know that the restaurant industry, the hospitality industry is still very much limited. So if I were to guess, if the news had slated more towards the rise in the COVID cases, I think more individuals probably went out and tried to meet those needs of bringing beef into the freezer, so now I can be ready for the next event, whatever that event may be. And they filled up their freezers, and now there might be just a little bit of back push against the box price for the next couple of weeks until we get through the Thanksgiving and Christmas holidays.
All right. It's going to be a busy time of year. Well, thank you very much, Chris. Appreciate it. Chris Swift of Swift Trading Incorporated in Nashville. Janet, back to you.
All right. As always, thank you.